Hello and welcome. Today's guide is brought to you by the experts over at My Tax Accountant. We're going to be diving into a topic that can be a real headache for a lot of UK taxpayers: foreign tax credit relief. If you earn any money at all from outside the UK, you are definitely going to want to stick around for this.
Okay, let's just get straight to it. This is the big question, isn't it? You've worked hard for your money, you've already paid some tax on it in another country, and now you're worried that HMRC is about to come along and take another slice of the pie. It's a really common fear, and for good reason.
But the good news is, you shouldn't have to. Our whole goal here is to cut through the jargon for the 2025/26 tax year so you can walk away feeling confident that you're paying exactly what you owe, and not a single penny more.
All right, so what is this system that's supposed to help you out? Let's break down exactly what foreign tax credit relief, or FTCR as we'll call it, is all about.
At its heart, FTCR is basically a safety net. Think of it as a credit you can claim against your UK tax bill that accounts for the tax you've already paid to another government. It's the UK's way of making sure your global income is taxed fairly, not doubly.
Now, this slide is absolutely crucial. It shows the two key numbers we're always working with: the actual tax you paid abroad and the UK tax you would have owed on that same bit of income. And listen, if you only remember one thing, make it this: your relief is capped. You can only claim the lower of these two amounts. So if you paid a ton of tax abroad, more than the UK equivalent, you can't claim it all back. This is the key rule that stops people from overclaiming.
And here's a fantastic pro tip from the team at My Tax Accountant. This isn't just a one-way street set by the UK. The UK has special agreements with tons of other countries, called Double Taxation Agreements. The specific rules in that treaty can totally change how much relief you're entitled to. So yeah, the country where you actually earned the money really matters.
Okay, that's the theory. But what does this actually look like with real money on the line? Seeing the numbers in action is by far the best way to get your head around how this credit actually cuts your tax bill.
So let's introduce Zoe. She's a freelance graphic designer living in London. Now, most of her work is for UK clients, but she did get some interest from an overseas client this year. Her situation is a perfect, clean example of how this whole thing works in the real world. First up, her total income. She earned a solid £48,000 from her UK work, plus that extra £4,000 in foreign interest. That brings her total income for the tax year to £52,000. This is our starting point for everything. Now, if you run that total income of £52,000 through the UK tax system, her initial bill for the 2025/26 tax year comes out to £8,032. And remember, this is the amount before we've applied any of that foreign tax credit relief.
Okay, stick with me here. The next step is to figure out how much of that UK tax bill is specifically because of her foreign income. The way we do this is by calculating the tax on her UK income alone, which works out to be £7,086. The difference between her total tax bill and this UK-only tax bill is £946. That's the slice of UK tax that's connected to her foreign earnings.
And here we are, the moment of truth in the calculation. We have to compare the two key numbers. We've got the UK tax on her foreign income, which is £946, and we've got the actual foreign tax she already paid, which was £300. So remember the golden rule? She gets to claim the lower of the two.
And there you have it. Because £300 is the smaller number, her relief is capped at the £300 she actually paid abroad. This £300 credit comes right off her UK tax bill, reducing it from £8,032 down to a much nicer £7,732. Success! She's avoided being taxed twice. So, how can you apply this to your own situation? Well, this slide is basically your checklist. You just follow these 6 steps, exactly like we did with Zoe's numbers, to figure out the relief you're entitled to. It's a pretty logical process that takes you right from your total income all the way down to your final claim.
Okay, so the basic idea seems simple enough, right? But, and there's always a but with tax. This is where things can get a little tricky in the real world. Let's look at some of the common traps people fall into.
This slide is so important. Forgetting the relief is capped is the #1 mistake, just like we saw with Zoe. Another big one is mixing up different income sources. We'll talk more about that in a second. People also completely forget how different tax rates in Scotland or even things like the high-income child benefit charge can mess with the numbers. And of course, the classic mistake, not keeping proper proof of the foreign tax you've paid. HMRC will want to see it.
And here's a detail that catches so many people out. Did you know this? If you have, say, dividends from the US and some rental income from Spain, you can't just add them all up. You have to run that whole 6-step calculation we just saw for the U.S. dividends, and then you have to start all over again and run it separately for the Spanish rental income. It's definitely more work, but it's the only way to get it right.
This chart really shows you why your postcode matters. Scotland, for example, has completely different income tax bands and rates compared to England and Wales. Because of these different rates, the amount of UK tax due on foreign income will be different for a taxpayer in Glasgow versus one in Bristol. That can directly change how much relief you can ultimately claim.
So we've covered the what, how, and the what to watch out for. Let's wrap things up by talking about how to make sure you get this right on your own tax return.
And look, if your head is spinning a little bit right now, that is completely normal. Juggling different income types, different countries, those double taxation treaties, and all the right forms, it can feel like a lot. Honestly, you are not alone in feeling that way. This is one of the more complicated bits of a self-assessment.
So the big takeaway here is don't just guess and hope for the best. Getting professional help can give you peace of mind and make sure you're both compliant and as tax efficient as possible. If you've got any questions, reach out to the friendly team at My Tax Accountant. All their details are right there on the screen. And for more straightforward tax guides like this one, make sure you hit that subscribe button on their YouTube channel. Thanks so much for watching.